Earlier this morning, I sat down with former Treasury Secretary Larry Summers to discuss his new proposals for tax reform. So I asked the former Obama and Clinton administration official what he thought was wrong with the wealth proposals by Elizabeth Warren and Alexandria Ocasio-Cortez. Here's what he said.
There's things we can do that correct subsidies, that remedy injustices, that close loopholes, that would be good to do even if we didn't need any revenue. These kinds of provisions, like raising rates or taxing wealth, we may need to do them at some point, but we should start with things that will actually help the economy rather than things that interfere with, at least to some degree, with incentives to work and save. The tradition has always been to start with tax shelters, with closing loopholes, with broadening the base. If you don't do that, you're likely to be disappointed by the revenue yield because people are going to find all kinds of ways to avoid the taxes, and you're going to punish people and discourage some of their economic activity without actually generating much revenue for the federal government. Our loophole closing plan raises about 3 times as much revenue as pushing the top rate up to 70%, as the Congresswoman proposes, and we think it raises a lot more revenue than wealth taxes realistically will raise.
I read your proposal, and 2 themes stood out to me: simplification of the tax code and trying to spur economic activity. The White House would argue that it just accomplished that with its $1.5 trillion tax cut.
Tax code's a lot more complicated with the distinctions like pass-throughs and all of that it has introduced into the code. It's set up a variety of new kinds of opportunities for sheltering. It's made the rules, for example, if you sell real estate and buy new real estate, more complicated than they were before. So it's certainly not simpler, and it's certainly not fairer in the sense that the benefits went to people with the highest incomes. And if you just look, growth slowed down from the first quarter to the second quarter, the second quarter to the third quarter, the third quarter to the fourth quarter, and on the forecast from the fourth quarter to the first quarter. So it sure doesn't look like it's set off any kind of growth boom. Very much the opposite. So I don't think those claims can be made for the White House. And look, it is very easy in the short run to produce a little bit of benefit if you cut taxes. The problem is that it's not a long-run sustainable strategy because the government has to pay one way or the other for what it spends. And that's why we've got prospective deficits that are larger than we've had in peacetime, certainly when we have a good economy, than we've ever had before. So I don't think that's any kind of long-run approach, and I think you're, frankly, in the performance of the economy so far this year, starting to see it. And, you know, the market's rallied, but that's because it's figured out that the Fed's going to do whatever it can to hold the economy together, and that's come as a source of relief. But that'd be a serious mistake to confuse that relief with strength.
In fact, the White House's latest call is to cut interest rates. Larry Kudlow, coming on CNBC Friday, advocating for a rate cut of 50 basis points and for the Fed to stop reducing the balance sheet, though he says the underlying economy is quite good. Does this make any sense?
I don't think very much. You don't cut interest rates from 2.5 with urgency because you're feeling great about the economic future of a country. It's just not something that's got any precedent in economic history. You do it when you're alarmed and worried. So I think it would be premature to cut interest rates by 50 basis points, but I've been generally dovish on monetary policy. But the key point is you can't brag on an economy and say it desperately needs urgent monetary stimulus and that's so desperate a need that you're prepared to take unprecedented steps in politicizing the Fed. It just doesn't add up.
Right. They say they want to protect the economic recovery that Trump helped generate, given the fact that there are headwinds from overseas and from some of the trade war.
The trade war is generated by them. There was no anxiety in the market about trade wars until they started in doing things like threatening to tax Canada on steel because of national security, or tax European car imports as if a Volkswagen is a threat to our national security. So right. I don't think those claims make any real sense at all, to be honest.
And then there's this issue of politicizing the Fed. The president is tweeting about what Fed policy should come next. Larry Kudlow is out talking about it on CNBC, and they're about to propose a nominee to the Fed board, Stephen Moore, who has very close ties to the president, wrote a book about Trumponomics. Do you think we are at a moment where Fed credibility and independence is at risk, or is that just being overblown?
No, I think it's a serious concern. Look, these are not new policies in the world. They are the policies of tin pot Latin American countries before they have serious economic reform. They are the policies of authoritarian populists throughout emerging markets. And so there's been a huge opportunity to study them, and they lead to very bad economic performance. And so this is a serious mistake. I have a lot of confidence in our institutions. I don't think Jay Powell is going to listen. But this is another source of anxiety about American leadership in the world and seriousness of purpose.
Larry Summers, the former Treasury Secretary of the U.S., Carl, he went on to say, look, we have this privilege. We have the dollar. We have trust in our institutions. And when you continue to have policies like that undermine these institutions like the Fed, which is pretty sacred and independent as an organization, Summers calls it dangerous. Now, he's been very critical of this administration, specifically its economic policy in the past. But I thought what was notable about this is that he had plenty of criticism for fellow Democrats as well, saying that Alexandria Ocasio-Cortez and Elizabeth Warren have the wrong idea when they talk about taxing wealth in terms of rates. That's not what it's about, and it's certainly not a way to get comprehensive revenue-raising tax reform.